Hello, this is Manesh Patel from ichimokutrade.com. Today is January 7th, 2016, and we're creating this video due to tons of emails we're getting and phone calls, and a lot of people are asking, are we crashing? Due to all the worldwide events that are occurring, not just in the US, but globally from Middle East to Europe to Asia and so forth, due to everything that's going on with China and Middle East. So what we want to do is address this issue. Now, before we begin in everything, I want to kind of remind everyone on one thing. Remember, if someone's selling, someone's buying. Okay, so there's always takes two people to basically create a market. So if we're going for a mass selling scenario, someone's buying. The key thing for everyone to understand is who would buy at this point and why. And that's the thing that we need to be able to answer. And what we're going to do is we're not going to go for fundamental analysis to answer this question, are we crashing or who's buying at this point. We're going to look at the charts. And the reason why is that fundamental analysis is great, but the thing is you don't know when the markets are going to react to that fundamental concept. The markets actually show you actions that people are willing to take behind their thoughts, and this is one of the reasons why we want to look at the charts and to analyze everything. The tool we're going to use today is going to be Ichimoku. If you haven't heard of it, don't worry, we're going to show you a simple explanation of it. It's a very simple system, and we're going to keep it very simple for everyone today. We're going to show you all the global markets from the US to China to Middle East to Europe and so forth. So let's begin. Before we begin, we want to go for our normal disclaimer to basically state this is for education use only. We're not soliciting to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, but we have to show you charts. So what we're going to do is we're going to use eSignal from Interactive Data today because it's going to be able to let us see pretty much any global instrument out there and chart it and so forth. So that's why we're going to use eSignal for everything. Okay. If you guys have any questions or anything, you could email us or give us a call at this location. We prefer emails if you can, if you have any questions or concerns. So let's go and start jumping straight into the charts, and let's start analyzing everything. Now, we're going to start looking at the charts. The very first market we're going to look at is China. Reason why is based on all the news and everything, China and Saudi Arabia are causing a lot of havoc around the world. So what we want to do is look at the Chinese market. Remember, this is not the first time we're going for a scenario where the Chinese market is influencing everyone globally. August of this year, which is pretty much around summer, the same scenario happened. Okay, so what we need to do is we need to analyze the Chinese market and also all the other global markets too. Now, the big question we have to answer is if someone's selling, who's buying? And that who's buying is what dictates what time frame we look at. Okay, because someone has to be buying, and the question is, how are they buying? Is it a short-term basis for buying, long-term basis, or very, very long-term basis? And if you start looking at the various time frames, you could kind of get a view of that. Okay, now let's look at things from a high level. If you look at a monthly time frame, normally when you start looking at a monthly time frame, when one bar was 1 month of price action, normally that would give you a viewpoint of 2 to 5 years projection. Due to volatility and everything and all the internet and the global things are tied together, that time horizon is now shortened. So a monthly time frame, believe it or not, is now giving you a 1 to 2 years or 3 years projection out. Okay, a weekly time frame will give you typically a 6 weeks to about a year and a half projection out. And then if you start looking at quarterly, that's pretty much what the old monthly time frame was giving you, which is 2 to 5 year horizon. So if you look at the Chinese market, this is a Chinese stock market here. You could see here in 2014 we had this big huge run up, and then right here around 6, which is around the summer of 2015 last year, we finally hit a top and we pulled back. And you can see here we pulled back to this cloud here. Okay, now if you don't know Ichimoku, don't worry, it's a very, very clean concept here. Okay, And what you're looking for, if price is above this cloud here, then the sentiment's bullish and you could bet on it going up. If price is in the cloud, that means basically we're consolidating. You shouldn't do anything at all. You should wait for price to come above the cloud or below the cloud. If price is below the cloud, that means basically you're betting on the instrument going down. So that's a very simple overview of Ichimoku, and that's all we're going to use today to analyze the markets. So let's continue to this chart. If you look here, we kind of came down here in August when the whole mess with China started occurring, and we came straight down to this cloud here, inner bar on the monthly on this weekly time frame here. We kind of poked down into this cloud here, but we never closed there. We closed above it. So the sentiment is still bullish here, even though this is going through here. Now, even though the sentiment is bullish, this is still a major pullback. That means over a long-term period, this was still bullish. And you could see it did stoke there and go up. But remember, this is a major pullback where this is profit taking that's occurring for people that have entered this thing since a very long time. Okay, so when this selling was occurring, this was profit taking for all the people that had basically gone bullish for this long time here. Back when all this happened, a lot of people thought the Chinese market was crashing. And you could see here it was not crashing, and the reason why is that it was still above the cloud. Okay, either way, what happened eventually, we consolidated. We never closed below the cloud at all. We kind of followed along this cloud up here, and the first point right here is the moment we closed below the cloud here. So this is the very first time the sentiment changed being bearish, and if you look at that date and time, this was roughly around November 23rd, 2015 of last year. That's the very first time the Chinese market went basically bearish as far as a weekly sentiment is concerned. And you could see here, and when it went bearish below the cloud now acted as a resistance, a ceiling, and trying to stop it from even going back into the cloud to go into a consolidation environment where it could eventually try to go bullish. And you could see here the top of the cloud was a resistance. It wouldn't allow it to go above it. And finally what happened is that it broke down. It tried a couple of times to sit there and go back into the cloud here and here for 2 weeks. It was not successful at all, so it basically went down. Now, if you're looking at the weekly time frame, you really can't see a support here below you at all. So what needs to happen is now, if we want to see exactly how far this thing's going, you need to go to a higher time frame. The weekly time frame is telling us the sentiment's basically bearish. So the Chinese sentiment now, if you look at it from a weekly perspective, from 6 months to at least a year and a half now, the sentiment's now bearish, and that's basically what it's going to be. So it still is going to have some more downside to it. Now the question is, will that thing go from a 6 months to 1 year projection to more towards 2 to 5 year projection? So what we're going to do is we're going to move to a quarterly view here and see what we're going to see here. Here you can't really see the Ichimoku indicator here completely, and due to the fact that there's not enough bars. But if you look here, we already outlined a support here, and you could see here on a quarterly basis here, when the whole mess was happening last year, this basically opened up here on a quarterly basis here, which was July 1st, 2015 here. So we're going to mark that off, and that's a critical support. And the reason why is if the quarterly time frame here closes below this level here by the end of this quarter, which will be basically April 1st would be the beginning of next quarter, then what's going to happen is we're going to have a long-term projection where China market for the 2 to 5 years now still could go bearish even further. And if you look here, the next support is going to be way down here. So we kind of have to wait and see what's going to happen on a quarterly basis. But if you look at it on a weekly basis, which is the next 6 months and so forth, the China market has a high probability of getting to this level here, 31.88. Now, it may even get there tomorrow or by the end of this week, get to that level here, bounce off there, and then now consolidate. So if you look here, there's a high probability of a consolidation pattern occurring between this level here, resistance level, and that support level here, and this possibly could consolidate here for a while, and then it could come down to this level here, or it just keeps on consolidating for a couple of months now. So overall, the sentiment for the Chinese market just didn't change today, unlike what a lot of people think, it actually changed back here November 23rd, 2015. The price action that's going on today in this month is just a follow through of what's been occurring for the last couple of weeks. If you're listening to our videos, we were talking about this thing here, and we were talking about how there was a major support at this level here. And we basically talked about the support level here at 36.73. If that ever got broken, this market was going to sit there and go down. Until that level here was being supported, as long as price was above this level here, it still had a high probability to get to this resistance level here. Reason why is a lot of people were still thinking that this downward movement here was a pullback to this master trend up here. Okay, so that's the Chinese market there. Let's quickly now go through the Saudi Arabia market, and we should be able to go through this faster now since we don't have to cover the basics of Ichimoku or anything else out there. So let's look at the Saudi Arabia market. Let's always start off with the weekly time frame. If you look at the weekly time frame here, we had a bearish trend here, had a support here, it was holding, and you could see here it was flirting around with a support here. It had a resistance here, it couldn't break that at all, flirting around with this resistance here, so it was a high probability of breaking that resistance, and last week it finally did. So now let's go from the weekly time frame to a monthly time frame here, and let's look at things. And if you look at it here, there's a support level here right there, which is the bottom of the cloud in the past, and that's basically where the Saudi Arabia market's going to. So if you look at it, it's basically price is high probability getting to 60.22 in the next, and if you look at it here, this is the monthly time frame, so we're talking about over a year period and so forth. Now the way everything's going on the lower time frame is a high probability it's going to get to there very fast, maybe within a week or by the end of this month too. So there's a high probability of getting there by the end to this level here by the end of the month. Okay, now if you look at it here from the quarterly basis, this is what it looks like on a quarterly basis here. Okay, and you could see we are below the cloud here, and you could see here the sentiment for the Saudi Arabia market had actually changed to being bearish over a long-term period back in July of 2011. What happened was we went for a little pullback here, and remember, this is just a little trend continuation for this big long run that the Saudi Arabia market went through all the way from 1999 all the way up to 2006. Okay, so that was the big run it was. Then it had a major pullback. Now you had a trend continuation. Got to this major resistance, which was basically the bottom of the cloud here. Held it here, right here of basically July 1st of 2014. And at that point, it bounced off there. Since then, we've been slowly trickling down over a quarterly basis here. But a lot of people don't look at quarterly charts, so no one could ever see that here. Most people look at our monthly charts, so you could see that from here, from this perspective here. Okay, and you can see we went up, we hit that quarterly resistance, stopped, and then slowly be trickling down here with time, and now we got a high probability going here. But if you look at all the time frames from lower time frames to weekly, monthly, quarterly, everything is now bearish, which is not looking good for the Saudi Arabia market. So we're going to get to the support, and then the question is what's going to happen there. Will we consolidate around that support, or will we break it to get to the next level? If we get to the next level, we're going to go down to 5,000 and so forth. So now let's begin the journey, and let's talk about the U.S. stock market. Okay, and let's look at the VIX. This is something that we've been blogging over and over and over. In 2015, the VIX actually helped us predict which way the stock market was going on a week-to-week basis. So we don't know if that correlation is still going to exist. We're going to keep on using this as a correlation to help us predict the stock markets until it doesn't work anymore. Before 2015, 2014, we're looking at bonds and treasuries, and they were giving us advance notice on what the U.S. stock markets were going to do. And last year, it was basically the VIX. So we're going back to the VIX and kind of seeing exactly what's going to happen here. So here's a monthly time frame here. Let's go down to the weekly, because the weekly was giving us a 6-month view of what was going on. And if you look here, we marked off the support here at 1277 and resistance here 2077, 20.74. Now, the VIX is an inverse relationship to the U.S. stock market. That means if the VIX goes up, the stock markets go down. VIX goes down, stock markets go up. And if you could look here, most of the time for years we've been living in this range. Then all of a sudden, last year, basically right around August here, we broke the resistance here and we went up and so forth, okay? And if you think about it, what caused this last year? That was China too. You had a combination of Greece and China and everything that basically was mulled up together, which causes volatility to go up. Now, we came all the way up to this level here, which is, I'm going to show you exactly why the VIX stopped at this point right here, okay? Now, due to the volatility of everything, we came all the way to that level here, and eventually we equalized and came back in this range here. Then all of a sudden, last December, last month, we basically broke that resistance here, and then we pulled back at the end of the month. Right, sorry, the second week, the mid part of December, we pulled back to that support level here. We held it. So there was a high probability of getting to this resistance of this green line, which is right there. It didn't happen at all. In fact, it came back into this range here. When it came back into this range, there was a high probability of coming to the support. But instead now, what it looks like, it's trying to break this resistance. Remember, this is the weekly time frame. The bar is not closed at all. So you kind of need to see exactly what's going to happen and see where it closes by the end of the week. If we close back above this resistance level here, then the probabilities for us to get to this resistance level increases drastically. If we sit there and close right at this resistance level or below it, then we still have a high probability to come back down here, which means maybe the stock markets have reached their bottom this week, and at that point they could sit there and bounce off there and try to go back to the top of the consolidation pattern. Notice I didn't say bullish, I said top of the consolidation pattern, okay? But one thing we don't like is that we don't like this price action that we've been seeing since December, where it's basically bouncing around this resistance level here. And what it basically is telling us is that the VIX is no longer supporting the weekly time frame, or it's not getting correlated, which it was seeing that last year. So what we're going to do is we're going to look at the monthly time frame, because the only thing that could sit there and break the weekly time frame for us is the higher time frame. So if you look at the higher time frame here, this is basically the levels here. So if you look at it on a long-term basis here, the new consolidation pattern, which is basically happening over time, is these levels here. And it's basically where the resistance here is 31.82 and the bottom here is going to be 12.77. That's basically the range for the VIX now for the entire year. And that's what we're looking for. Now, if we ever break this resistance here, that means now we're going to go to 53.24. That means basically we're going to, U.S. stock market, we're going to consolidate as long as we maintain this resistance here on a 31.82. If we ever break this resistance here at 31.82 for the VIX, that means the stock market will have a high probability of pretty much crashing. Okay? So that's the way we're looking at here. Now, let's go and look at the U.S. stock markets. What we always do is, even though the NASDAQ led the U.S. stock markets bullish last year and the Dow was the weakest of all of them, we always look at the EMini S&P 500 futures. And the reason why is that covers a majority of the U.S. stocks. Even though it's beta weighted, where it's weighted heavily towards certain industries, we're still going to look at it because it encompasses more stocks than anything else. Now, there is the Russell 2000, but the problem is there's too many small caps in there to a point it's not worth looking at that one at all. So here's the EMini S&P 500 futures, okay? And we want to go back to time, and you want to look at things here. If you look here, price was in the consolidation mode in 2011, and for the first time here, after a long time here, when we enter this cloud here, we sat there and closed above the cloud. So January 23, 2012, we closed above the cloud, and basically the sentiment on the weekly time frame went bullish. We remained bullish, and then all of a sudden, we quickly went down and changed sentiments here of August of last year. This was China. So China changed our sentiment on the weekly time frame to a bearish sentiment, and then we went back into the cloud and went back to consolidation. So for some reason, we went below the cloud, changed sentiments to be bearish, and then we went back into the cloud to basically go neutral, and at some points, for a couple of weeks, we went bullish as far as the sentiment's concerned, okay? And basically we came back all the way up here and we came to this big of this consolidation pattern, which is marked off right about right here. Okay, so if you look at it here, we came to this big consolidation pattern right about here and we kind of stopped. We never moved forward at all. So this is defining the top of the consolidation pattern now. Now the question is, where's the bottom of this consolidation? And there's high probability it's going to be right here, which is at 1923.10, which is exactly where we're aiming and trying to get to right now. Now, why did I choose that? And the reason why I chose that is that something here last August stopped the U.S. stock market from starting a trend. And the reason why is that when we closed here below the cloud here, the sentiment changed being bearish. But we never broke the lows here of these pivots here to start a trend to the downside. So whatever caused this here to stop and reverse is the same thing that's controlling our destiny for the U.S. stock markets today. So what was the cause here? The cause of this stopping here, well, and if you look at here and mark this off here, what happened here, right there, and if you go to the higher time frame was a monthly, it'll give you an answer. So what happened is that the weekly time frame went into a bearish sentiment, but it never sat there and followed through and started tanking at all. Reason why is you had the monthly support, which is this green line here, which is a support for 26 months, stopped it right dead in its track. So it stopped it here and bounced off there. Notice every month we keep on hitting that green line and we keep on testing its ground and we keep on bouncing off there. Okay, and that's the same reason why we are not tanking. So what's controlling our destiny and stopping our U.S. stock markets and tanking and going into a major pullback for the monthly time frame, or what we're calling a big bearish trend on a weekly time frame, which looks like the word tanking for a lot of people, is this monthly green line support. The moment we close below the support, then we got a high probability of getting to this cloud. And if you look at that projection of how far price could go, that's a big movement. And that's basically what is a bearish trend on a weekly time frame, but it will be a pullback for the monthly time frame. So if anyone's going to be buying this market, it's going to be people that are trading off the monthly time frame, which are people that are looking to hold these positions 2 to 5 years. And if you look at it, the reason why is that these people that are very long term were basically buying here. This is a big bullish trend here, right there. These are retirement accounts and stuff like that. And now what's happening is there's some profit taking occurring for those people. And that's basically what's causing it. So even if we come down to the cloud here, the movement down here is still a small percentage of the movement that went up. So still over a 2 to 5 year period, we are still bullish, okay? But we still could go for a major pullback as far as a monthly time frame is concerned. That pullback on a monthly time frame will look like a big tanking of the U.S. stock markets and so forth here, okay? And a perfect example here will be in this scenario here. Do you guys remember in 2011? Look at this downward movement here. And let me clear out everything so you guys could see it here. So if you guys remember what happened here, this is a point right there in basically right here in 2011. And let me show you this on a weekly time frame. Let's shrink this down. And you look here. Zoom in right there. So let's go here. You could see right here, 2011 was right there. We went again below the weekly cloud here, but what happened was the weekly time frame never went bearish, started a bearish trend at all, and which would look like a tank. The reason why is the monthly time frame cloud held everything in check to a point we never got below there here at all. The only time we're going to sit there and enter a long-term bearish trend is when we get below the cloud. And this right here shows you a perfect example of 2008 when we did get way below the cloud here. If you look here, the chances of us getting way below the cloud is going to have to be a huge drastic move. That means the world has to be coming to an end to even get to that scenario. Because to get to the bottom of the cloud, that's a huge price movement down. So if you, long story short, if you look at it, this green line here in the monthly time frame is controlling our destiny on a long-term basis, because these are the people that are profit taking right now. And if you look at that green line support, that's where it marks off there, and you go back to the weekly time frame, we are pretty much touched down today right at that level here. The key thing is where do we close at the end of this week? Also, where do we close at the end of the month? Because inner bar in the month, we could sit there, come lower, but as long as we sit there and close back above this level here, the monthly time frame will still be holding the support level. So that's a high-level summary of everything here. The video is a little long, but I want to make sure that we did cover everything out there so that everyone can see what's going on. So if you're a long-term trader where you're looking to hold your positions 2 to 5 years, you got no reason to panic. If you're a bullish trader and you're thinking short-term and you're still bullish in this market, which you're thinking in terms of a month to 2 months or 3 months, you should be panicking because the markets are going down. They're going down to the next support level, and you're taking a lot of heat and you don't know exactly where to go. So remember, be very careful. Analyze the charts on a short-term basis. We have been blogging this on a weekly basis where we've been mapping out the E-minis and giving you those levels, those critical levels. So if you've been following us on any of our social media from Facebook to Twitter and so forth, you should not have been bullish going into what's been this ugly environment right now. If anything, you're neutral, but you definitely wouldn't be completely bullish at all. Okay? If you guys have any questions, you guys could give us a call or email us. Thank you.